We are officially launched. We've been hearing from the banks. It hasn't been bad, but there's many hundreds of banks still to come. So everybody's keeping an eye out. It's going to be a case by case basis. So if you own any banks, be sure to tune in to your specific one. Listen in on the conference call. Some of the banks will release, a lot more information than just what's in a press release. Sometimes they have like a shareholder letter or investor presentation. Be sure to check out everything that's going on in the banks for this week, and then we'll still get some more banks again next week. So the banks are still swirling out there, and they are going to be market movers probably this week. But we're also getting the start of the FAANG stocks. And these are also going to be a big deal this week. What are their charts looking like? They're off the lows, off of the sell-off from last year, but what are the valuations? What is their track record? Are any worth paying special attention to this quarter with everything else that's going on? Let's dive in and see. So we're going to go in order with the FAANG, and we're starting with Meta, formerly known as Facebook. And you can see it's been a wild ride for Facebook shareholders, right? Had that huge sell-off in 2022. It looked like it was going into the abyss, but then finally bottomed and now has turned it around, both in earning surprises and in the share price. So you can see they posted a big earnings beat last quarter. That's what the big green arrow is. And so the market really liked that, even though it was already up before that earnings report came in. But it still continues to have strong momentum. Year to date, the shares are up 84%. They were cheap down there at the bottom in 2022 on a PE basis. They got down as low as, I think, about 12 times, but now back up to 21, almost 22 times. That's not nosebleed level, but the earnings have been coming down on Meta. So you got kind of a value trappiness going on, but the street doesn't care. It's still bidding it up. So we'll see if they're able to, surpass expectations again and keep this momentum. Then we're going to look at Amazon. Now, Amazon also has kind of an iffy track record on the earnings surprise area over the last couple of quarters. So as soon as Jassy took over for Jeff Bezos as CEO, they started missing. He was doing a lot of different things at the company, closing stores, closing, divisions, laying off a lot of people, trying to right the ship at the second headquarters out in Virginia. They halted construction on one of the new buildings there to wait out kind of this slower period. And they're doing a host of other things. But the street has not liked it. As you can see, these shares, though, have bottomed, but they bottomed later than Meta, and they haven't had quite the rebound that Meta has. But they are up 22% year to date now. So that's at least helping a little bit. But over the 2 years, they're down almost 40%. And during that time period, the S&P 500 was down just about 1%. So that's a big difference. And the NASDAQ down over the 2 years period, 13.4%. So Amazon underperforming the NASDAQ and the S&P 500 over the longer time period there. And what does the P look like on this one? It's always been expensive, but it has gotten more expensive as those earnings have been cut. So PE of 75.8 now on Amazon. And this one, though, everybody owns. But with the consumer, possibly slowing quite a bit here in 2023, people are a little bit uneasy, also uneasy about AWS and the slowdown there. So this is a big one to watch, Amazon, ticker AMZN. Then we're going to have Apple. And I was surprised by this chart. because I didn't realize that they missed. They missed on the Zacks consensus last quarter. It is their first miss in the 5 years, as you can see. They were the only one of the FAANGs that had the perfect 5-year track record. Super impressive with a pandemic in there, but they finally did have the red arrow as the tech area is slowing. I do think they'll probably rebound this quarter, at least on the earnings miss or beat, but we will see. It is a tricky quarter for all the analysts, no matter what industry they're in, but certainly tech, because there has been this slowdown. What do the shares look like on a valuation basis? They're still expensive because it hasn't really had the big pullback that some of the other FANGs have had. Still trading at 27 times, so that's not altogether cheap. I don't think Buffett would be looking much at it at this level if he wasn't already in it. Year to date, though, the shares are up 27%, so it has had a nice rally off those lows there to start the year. 2-year track, it's up 19%, so it is not down like some of the others. So that's how Apple has been outperforming, and people have stayed loyal. They haven't really sold off these shares, as you can see. So Apple, another big one that we're going to see reporting in the next 2 weeks. Then we're going to have Netflix. This is the one that is reporting this week, and they put together a nice string of beats there for a while in 2021 and 2022, but then had another miss last quarter, and that was a big miss with that big long red arrow. But nobody's really cared about the misses or the beats on Netflix, very much. It's really about the subscribers and what they're doing with that, and to some extent the costs and price increases and that kind of thing that we're seeing now. So what is happening with that? We're going to find out this quarter. The shares aren't cheap, but they have not been cheap for all of time, basically. But they have come down off of the really sky high valuations, around 100 times earnings, and they're trading about 30 times earnings right here. Year to date, they are up 14.8%, not getting the meta rebound, but they are up off those lows in 2022, which happened a lot earlier in the year than it did for some of the other tech companies. Over the last 2 years, however, you can see the big decline there. They're down 39% during that time period. And then we're going to wrap it up with the G, Alphabet. GOOGL is the ticker. This one, nobody really has cared about the earnings surprise track record either, but it managed to put together an outstanding record there during the pandemic. Once the shutdowns happened, yes, advertising did fall, but there are some of their divisions like YouTube really soared. And that was the era of YouTube. It has slowed. So what's happening with YouTube? Also, the big question is Chat GPT, the AI. Why is Alphabet behind Microsoft in this area? What's going on behind the scenes? A lot of people have jitters there, but you can see shares are up off the lows, up 23% year to date. Over the last 2 years, they are down, but just 4.6% because a lot of the gains, started about 2 years ago, that nice little rally. So these shares, are they cheap? They have been among the cheapest of the FANGs until Meta really sold off there. And they are still among the cheapest at 21 times. So it's not a value here, but it's not sky high either. It's missed 4 quarters in a row. I don't think they care if they miss again. And I don't think the street cares either, but we'll see if they can get back on track with a green arrow here to start the first quarter of 2023. So as you can see, I had quite a lot to say about these 5 stocks, and everybody will be watching them over the next several weeks. Netflix reports first, as it always does, and it's out of the gate this week. So we'll have some ideas on what's going on in the streaming side, but they're not altogether important for some of the other companies in the FANGs, which are, in the cloud and now AI and some other areas. So we got to wait to get some of those to see what's going on there. But these are the big market cap companies We all own them. I know I own several in my own personal portfolio. I own Amazon and Alphabet. I used to own Meta, but I did sell it last year because, as everyone knows, I'm not a fan of the metaverse. So I don't want to own what I'm not a fan of. But we all own them in some way, either in the S&P 500 or the QQQs. Most indexes, if you own a large cap index, you're probably owning them too. But these are going to be key reports. We're all going to be tuning in. I know I will be. You should too. And I'll have more earnings all-star charts, videos, and everything throughout earnings season. And I've got a couple more for you this week. So be sure to tune in.